Hello there and welcome to the Rate Update with Dan Frio. I am Dan Frio, where today we're going to discuss home sales, mortgage delinquencies, what's going on with China, Russia, and the Fed, and then wrap all this up together and say what's going on with real estate, especially when in regards to mortgages. So if you're new to this channel, my name is Dan Frio. I do the Rate Update every day to inform you guys to keeping up on the news in regards to real estate, especially in the finance world. So if you're new again and you like the channel, please don't forget to give us a thumbs up, subscribe down below, hit the bell every time I post a video, you get an alert. Now let's get to the news. The biggest fear out there right now is mortgage rates are going to spike so high, we're going to go into a recession and housing prices are going to plummet. So today, this afternoon, I'm going to go over some information that I've been diving into to help you guide through this or navigate through this environment. Now, I'm not pumping or FOMO on real estate. It's up to you guys to decide what you want to do. But rents are going up, home prices are going up, interest rates are going up. So my job is basically to help you educate you to make sure you make a prudent decision for you and your family. So that's the whole agenda here, just making sure you're an informed consumer. So this afternoon, what I'm going to do is I'm going to go over and just give you a case of, what's going on with home sales. They declined, but this doesn't say home prices dropped, okay? Basically, they're coming back in line to where they should be. So I'm going to dive in on that, but they declined 8.6%, all right? And it's right in realm of what we were expecting, okay? So that's what we're going to go over this afternoon, as well as mortgage delinquencies. How are mortgage delinquencies? Because I see all over the place that more and more foreclosures are up 700%. Well, is that a fair and accurate statement? You'll find out later this afternoon. The market report right here, this newsletter that I just sent out, and I already sent it out this morning. So if you check out all my social media, you can look at this. It's saying between now and the Federal Reserve meeting, there's a lot of stuff to digest. What they're going to do is they're going to go through corporate earnings. They're going to go through inflation measures. The uncertainty around the economy, especially because of the Russian-Ukraine war, and now China with COVID, and also there's a Taiwan situation creeping up. So we're going to go over all that and more later this afternoon to make sure you guys are informed consumers. Economic calendar for today, as we can see that pending home sales were down a little bit. Last month, they were down 4%. The expectations were to be down 1.6%, and we came in down 1.2%. I'll take it. That's a good number. It beats expectations, and there's a nice trend there. So with all this data going on, what's going on with mortgage rates? Well, what we do is we go over to the headlines in mortgage rates and interest rates and check out the MBS market. So why do we follow the MBS market? For those newbies out there, this is the bond that trades on Wall Street. Just think of it. This is the biggest component of your mortgage rate. Whatever this is doing, okay? It's a bond that trades on Wall Street. That this is what's going on to the price of the bond. So to just inform you guys, newbies out there, how this works, if the bond price goes down, rates go up. We don't like that, okay? What we're looking for is we love when the bond prices go up, and that drives down interest rates, okay, making things more affordable. So we go into this. You can see that basically since who knows when, October of last year, basically December of last year, ever since then, we've just had it steady downwards. Okay, and again, these are not, this isn't the rates, this is the price of a mortgage-backed security bond. So how does that get reflected in mortgage rates? Well, let's go right here. This is where the opening bell was, and where mortgage rates basically started for the day. But based on a lot of the information we have from the MBS market, we're going to have possibly rate increases today. Now, you guys, I have a lot of comments saying, Dan, oh, good, great comments. Your rates are going down today. Guys, I'm just giving you a macro and a micro on what's going on in the economy and especially with mortgage rates. So let's go across here, but let me break into this cell real quick and tell you in my lingo, and then I'll put it in English and move forward. So if we focus in on here, you're seeing that mortgage rates that are published right here, these are by Mortgage News Daily. It's a survey that they do all over the country with mortgage lenders. They compile the data, and this is the rates that they get. So in the 30-year fixed, it was down 4 basis points, coming in at 5.28 is the rate. That's coming in with a cost of 0.4 in points. Okay, so let me break this down. Basically, it's the 30-year fixed rate right now is 5.28. It's 4 basis points, so 0.04 less than where we were yesterday, and it comes in with a cost. This cost right here, okay, how do you calculate that? Well, basically, you take your loan amount, And then you multiply it. You multiply it. In this case, you would put times 0.4, hit the percentage sign, and then hit equal. And that's how you calculate how much in points it would cost you. But again, guys, this is just the national average. All right, so let's go across here. We now have the 15-year fixed down 4 basis points, coming in at 4.71 with 0.4 in costs as well. We have the government sector. Now, these are usually the government loans have pretty similar rates. So in this case, Mortgage News Daily only posts FHA, but we're going to lump all this into the government loans just to give you an idea what's going on in that track. So FHA, VA, USDA. Right now it's coming in at 4.88, down 2 basis points from the day before, no points there. The 30-year jumbo is coming in at 4.5, down 2 basis points from yesterday. And then we have the 5/1 ARM. It's the only thing bucking the trend, coming in at up 0.01 to 4.2, and that comes in today with a 0.5 in cost. You can see rates right here, the chart. We're in uncharted territories than we've been for years. And then the sentiment for today is significantly weaker. So what does that mean? Well, it means bonds are pretty much weak today. They're probably going to drop in price and raise in rates. Another thing we see is the stock market rallying. That is also not good news for bonds, especially mortgage-backed securities. So if you'd like to find out more about me and my team and how we might be able to help you guys with all your mortgage needs, such as if you're looking to build a house, you need an extended lock. Don't let your builder say, oh, let's just float it until 30 days prior to closing. You're gonna lose. Okay, so if you're building a house, please give us a call. If you're looking for a pre-approval, we can do that in about 15, 20 minutes to make sure you guys get out there quickly and get that bid on in that house that you love. If you're looking to refinance in regards to a reverse mortgage, debt consolidation mortgage, pull out cash to do home renovations, anything you need, please reach out to us. We'd love to help. How do you do that? Right up here, you can give us a call at 844-775-5626. You can click online to apply now, hit the Calendly button, or we also have this chat bot that we now have. And Nico's up next. I'm in rotation. I'm the third one in rotation every day, so you might even get me when you go on there. So thank you so much for taking the time to watch this. Please, later this afternoon, we will be posting a video, or I'll be posting a video going over home sales, mortgage delinquencies, and what do I think that's going to do to the housing market. So stay tuned for that. So otherwise, God bless. Thanks for watching. Give us a call. We'd love to help you. Take care. Bye-bye.